Good morning, it's Harvey Jackson. I'm just going to get through some news items. Trump, in ahead of the meeting of Carney and President Xi from China, Trump is making comments that USMCA, aka the NAFTA, is irrelevant, even though he's the one that brokered that deal. Now he's saying he doesn't need any of those products, as a lot of countries are coming to the U.S., and that is true with his tariffs that he put on. But we'll see how this all plays out. He did this ahead of the arrangement here, but Fed is uncertainty is him picking on or trying to basically put some pressure on Fed Powell leaving because he wants him to leave so that he can appoint another one there because he still doesn't quite have the majority there no matter what happens. But it might have backfired a little wee bit. But you can see gold and silver are taking off. I'll show you that later here. U.S. trade ends 2025 with a record 1.2 trillion surplus. So you can see how the surplus keeps building over the year. China trade with the world. So you can see exports versus imports. They almost matched up. But this is the one that everybody's going to pay attention to is the exports to the U.S. versus imports from the U.S. And that trade differential is what President Xi is trying to put pressure on Trump. But at the same time, he did a data dump for Canada to put leverage on Carney. So hopefully he doesn't do something stupid like he normally does, or where it just doesn't matter. He doesn't care, but he cares about Brookfield. So Brookfield Canada Corporation might actually matter to him. Let's see. But the China imports from Canada, it was 10.4% year over year less, and imports down from a record of 46.6 in 2024. And the last time that president from Canada visited the Chinese delegation face to face was 2017. This could be the reason why the soybean oil is rallying a little bit. It's about the soybean oil yield that got reported a few days back, and I guess I never noticed it. But anyway, the soybean oil yield is lower than expected, as the yields are pretty high on the bean, smaller beans, lower oil content. So this Reuters article is just talking about how Trump is having issues trying to bring down inflation ahead of the possibly losing the Senate and Congress come next November when the midterms actually happen. Soybean futures fall as record Brazilian crop looms, so it's still pointing to a big crop there. Silver rallies and gold was rallying as well. So let's just quick look at the weather. It's going to start to turn cold in the prairies for sure, and they're just pointing to some moisture differentials that are going to start happening. Here's the GEFS precipitation anomalies. Now that harvest is starting, some of this might be okay, but we'll see. It still could pinch the yield for some as well. So we'll have to see if it actually comes about. Like the soil moisture is still pretty decent. Canola is up just under $1 as I took the snapshot. Rapeseed is down at 1.75 of a dollar at 471. Soybean oil is still rallying at 51.40. Palm oil is just down, slightly down, and your crude oil is 61.61 a barrel. Soybeans up 4.5 cents at 10.43, and your spring wheat is basically unchanged, and your wheats are just right around a penny down to a fraction of a penny down, and corn is up 3 1/4. And the Canadian dollar is just slightly up as well. So you just have a look at here, put the retracement on. We're getting into that 61.8 full retracement. That's where it normally bounces or pushes back if it doesn't push through. You got some of these other longer term moving averages up here that will create some sort of resistance there as well. We're still short, and I think we still need to be short as the fundamentals have not changed. But hey, if market wants to accept that Carney can get something done and he comes to some sort of agreement, the fundamentals are probably still going to have to take over at some point. And I still think there's some downside. Here's your November contract, your rapeseed. Your price differential is sitting right at $128, so on the lower end of this range here. But when you look at the longer term range, that last year when we actually had decent exports, we were in that $150 to $200 range differential between Canadian canola and European rapeseed priced in Canadian dollars. Soybean futures or soybean oil futures, so this leg up here is trying to it's gotten above all the moving averages, so that's a sign all by itself, but it also tells you how long this market has been going kind of sideways here as well. Here's your soybean futures, really nice. It looks green, but I'm not sure how long it's going to stay green as this market is still under pressure. Crude palm, the pace of going up is a lot slower, and this is your crude oil futures, and it's broke above that channel, and it looks like it's approaching the 200-day moving average. Canola or Canadian dollar retracement is sitting right at that 50% mark, and it seems to be stuck there for the time being. U.S. dollar index still looks like it's going up, and the economic issues that you keep talking about rallies gold, rallies silver, and your copper is trying to make some highs here as well. So all the metals are rallying. And and I don't talk about this one very often, but this is your 1-year government bonds, and here's your 10-year. So you've got this one going down, and this one's slightly going up. So that divergence is saying that there's a problem. Have a quick look at wheat. Here's your channel that we're trading. We're trading at the bottom end of the channel. That is not a place where you make sales of wheat if you don't have to, that's for sure. Kansas, same thing. Chicago, and you're milling wheat all down, and corn is maybe the anchor right now. Here's your feeder cattle, nice move up, and your hogs looks like it's going up, but it looks like it's starting to consolidate, going sideways here. And that's all I have for you today.